entitled Have We Made Renewables and PPAs Too Complicated? Today we're going to be widening our focus and hopefully talking not just about PPAs, but touching on other renewable supply options that will reflect the different objectives and needs that companies have and have different levels of complexity and risk. We'll also be discussing the challenges faced by different parties in making a PPA work and what some of those common solutions might be. To help us do this, we have some wonderful panelists today we would like to thank for taking the time to join us. And I'm really expecting quite a lively discussion. I will let them introduce themselves in a moment, but before I do, a reminder that you can post your questions in the Q&A. There's a Q&A section. What we'll try and do is answer some as we go along. We have a Q&A session at the end, and after the webinar's finished, we will also try and get back to you with some more information about questions that have been missed. So without any further ado, I would very much like to introduce our panel to you and let each one of you tell them briefly about themselves. So hopefully we will get a change of slide in a moment. There we go. So first of all, I am going to introduce Deborah Harvey and let her talk about herself. Deborah.
Thanks, Russell. Good morning, everyone. I'm Deborah Harvey. I'm an energy lawyer and partner here at Freeths. Freeths is a leading national UK law firm with a large, very active renewable and clean energy practice. Within that, I specialise in energy sector transactions, regulation and agreements. I've been advising on PPAs for about 14 years now, including corporate PPA arrangements, utilising all of the structures that we are going to be talking about today, from both the perspective of the generator and the corporate. I also have extensive experience of utility offtake contracts from the perspective of the generator's funder and the offtaker, and I spent time in-house earlier in my career with one of the most active off-takers in the UK, so do have that insight. Thanks, Russell.
Thank you very much, Deborah. Now I would like to introduce Ross Irving. Ross, do you want to introduce yourself, please?
Yeah, thanks, Russell. So Ross Irving, I'm the Senior Manager for PPA Origination and Structuring at EDF. It's a long title, but essentially it means that I manage the long-term bespoke side. So anything that doesn't fall into sort of a 1 to 3 year PPA in standard terms, and we'll cover off some of that later on, which managed by a different origination function, comes under my team. And that's like corporate PPAs, long-term CFD PPAs, and long-term framework agreements as well, is what we specialize in. I've got obviously backgrounds from a supplier point of view, but also developer point of view. I've worked for developers in the past, and working closely with corporates, obviously part of the role now and before as well. So it's a little bit about me.
Super, thank you very much. Next, I'd just like to introduce from Zygo, Mark Chappell. Do you want to introduce yourself, please?
Sure, thank you, Russell. So my name is Mark Chappell. I joined Zygo back in 2019, which was pre-acquisition by Schneider Electric, when we were a full-on startup. So very soon now I'll be moving into my 5th year at the company, and my role is now as a senior PPA manager, acting as facilitator and intermediary between the buy and sell side. So I work alongside Russell within the energy markets team, and I've played a role in the completion of several PPA EU transactions going through the platform. So yeah, happy to join today.
Super, thanks, Mark. We also have Renu from Beckart. Unfortunately, I think Renu is having some what we might call major IT issues just at the last minute, despite the fact that all the practices and everything, because we do practice, I promise, have gone quite well. Renu is the decarbonisation lead at Beckart, and as a customer has done corporate PPAs, and would have given us that perspective. What we're hoping is that the IT issues resolve themselves quite soon, and he can join, but we will just keep moving on a little bit, and hopefully he will get stuck in later, and we'll pick up on the panel. So I can see everyone's in absolute anticipation of what my first question is going to be. Nervous energy going on. So I think as the webinar has a very interesting title, I think it's probably the place to start by me asking the panel, have we made renewables and PPAs too complicated? So let's get some views. Deborah, would you like to go first, please?
Thanks, Russell. Happy to. And yeah, interesting and big opening question. I think the short answer is no, but I do recognise that this depends on perspective, and it's very easy for me to sit here and say that as an energy lawyer. I don't think the arrangements are too complicated, but I think they can certainly be more complicated and more involved than we have seen previously, particularly if, as either a generator or a corporate, you are looking at securing price certainty through your PPA arrangement. I think looking at this from a generator's perspective, we've seen enormous change over the last decade in how renewable power offtake arrangements are contracted. If you think about how renewable power was typically contracted 10 plus years ago, a generator would usually be looking to accredit their project under a subsidy scheme, the renewables obligation or the feed-in tariff, depending on the size of the project. And in the case of a feed-in tariff project, probably wouldn't have entered into a PPA, may have elected just to obtain revenue through that feed-in tariff contract. In the case of a ROC project, the generator would often then enter into a PPA, typically with a utility, often on a long-term basis. 15 or 20-year PPAs were not uncommon in the market at this time. The power pricing used in those arrangements would have probably been an index price, maybe with a floor or guaranteed base price, which would have enabled modelling, delivered revenue certainty, and kept any funders comfortable with the arrangements. I think the closure of those RO and feed-in tariff schemes and the competition we've seen around to replace that price certainty, but do require a far more engaged approach from a generator in both procuring the arrangement and then contracting it, and far more advisor inputs also required, because the corporate PPA market isn't as established as the utility market when it comes to the contractual positions and the starting point documents that are required. And then I guess sort of flipping that on its head, similarly from a corporate's perspective, we're seeing far more engaged corporates procuring power in the market now, both to access best value and price certainty, but also in view of the need for compliance with sustainability criteria and green credentials. We're not now looking at corporates just putting in place a utility supply contract and retendering it every few years, as we were seeing sort of typically 10 plus years ago. Corporates now want to be able to talk about sustainability. And in view of the huge volatility in market prices, are now very engaged on managing their power spend. So I don't think we've made renewables too complicated, but there has been a significant change in how power is procured. And this does require a change in mindset from market participants. But I guess, to finish, I would say that this offers considerable opportunity, and certainly we are already delivering that for clients across the sector.
Awesome, thank you very much. I think that's a really good, really good summary and a really good point, because I think I've seen, you've seen that transition from the world of subsidy to the world of non-subsidy and the innovation and stuff like that. That's really good. Thank you, Deborah. Ross, same question to you. Have we made things too complicated?
Yeah, I can't argue with Deborah there. Very good response. So I think in short, no, but I think it's worthwhile potentially going through some of the routes to market available and how some are more standard and some are more complex, and some of the rationale behind that. So if Deborah touched on, typical PPAs in the most basic form are pretty standardized and simple to execute as a result. The generators kind of know what to expect, the suppliers know what to offer, and those corporates on the supply side on a similar simple level, on a Rico-backed supply contract, for example, they're pretty standardized out there as well. Focusing on that generator side though, so an index-linked day-ahead PPA, they can be offered for 1 to 3 years. Because it's a short duration, the contract structures are less complicated, the less risk in that from a supplier point of view. They can be offered pretty standardized, and therefore simple to execute. Building that a little bit, you've got your fixed price PPA. There's more risk suppliers have to price in. There's potentially more carve outs in those contracts to when those fixed prices would be offered, and more reliance on the generator data. So there's maybe some more complications around the forecasting of that. But again, they're pretty standard and simple in the market, and the majority of the PPA market we see are in those fixed or indexed markets. You've then got a combination of both, which we refer to as choice, but others refer to as flexible PPAs, where you have a start off in the index contract, and then the customer chooses when to fix. So it's a framework of how they fix, but if they don't fix, they've got the index linked PPA to fall back on. Whilst they're typically 1 to 3 years as well, and quite simple to set up, they can be longer, and we can do those for 10, 15 years as supply companies. And it just sets a framework up. So on a 3-year basis, a rolling 3-year basis, they can fix that far out ahead. And that suits as a simpler structure than potentially some of the longer term fixed price opportunities from a supplier risk point of view as well. So we're more readily available to offer those products. I suppose. Sorry, go on.
No, sorry, go on, Ross. Yeah, I'll let you finish.
The next one's available from a generator route to market point of view. I suppose the next more simple, it would be potentially the virtual PPA, but there's debate if that is simple and how simple that is. I would say the contractual structures within a virtual PPA. So you're going to get a physical day-ahead linked PPA from a supplier on a long-term basis. That is pretty simple and standard. You're going to a trading house or a corporate to agree a fixed price that you swap that revenue for, like a CFD contract. They're pretty simple, but the overall structure has complexities. And if it's a trading house and a supplier doing it, they're both pretty simple, but the generator has to understand that risk and manage that risk. Likewise, a corporate offering that long-term price fix has to understand that too. So the overall structure is complicated, but the contracts within them are simple. And then the final point to add is you have the direct corporate PPA, the physical PPA, where they're the most complicated contracts because they're long-term price fixed in there. You have to assess credit fully. They're up to 15 years as well, so potentially even longer term. So those durations, the need to take the power from a generator, buy that intermittent power, convert it to a base load block, do balancing, and then sleeve that into a supply contract. There's obviously lots of intricacies and links along that chain. So whilst the fundamentals can be quite simple to understand when you're used to that dialogue, the overall structure, if you're not, can be a bit overwhelming. So that's where it comes into some of the solutions we'll talk about later. But that's, yeah, from my point of view at least.
Super. Thanks, Ross. That's really interesting because it dovetailing alongside the the sort of evolution of the the subsidy non-subsidy is that same evolution of product from a simple, well understood supply to a green REGO back supply to the more complicated and the more choices, the more offers. I think that's really good. Thank you very much. I'll ask the question, Ray. Now, can you hear us? I don't think he can. I think he's struggling. No, okay. So I think what I'll do is I will just jump in and try and cover with Mark some of the things for from a corporate perspective. So I think from a corporate perspective, there are quite a list of things that are available that you can have in terms of green supply. So you could start, for example, with on-site renewables. Actually building sort of something on site if you've got that, or some people are lucky and they've got space nearby and you've got private wire. You've got the off-site, the corporate PPA, and as Ross said, what do I do? Is it virtual? Is it physical? How do I make that work? Some people have looked at REGO only purchases in the UK or GOOs in Europe. REGO backed supply contracts. People have looked at, is it possible to work with a supplier and get some more detail and get maybe power and REGOs from a specific asset? Obviously they look at energy efficiency as well, and somehow you've kind of got to navigate your way through all of these issues in terms of having both a strategy of what you want to do and some plans, if you like, which obviously then involves needing advisors, working out a route to market, and working out the complexity of it, because even seasoned energy buyers, this might sit outside the norm of what they may have been doing. Even if you were a full-time energy buyer for a corporate with a large demand, you've got very complicated supply arrangement where you can fix and flex and everything else. Something like a corporate PPA might come out a bit outside that. So there is a path to working your way through this complexity. And as as Ross said earlier, then, and Deborah has also mentioned, some bits are kind of simple and understood, and other bits are on their own maybe reasonably, well understood. Sometimes the complexity is when you talk to people and how you bring it all together. Mark, I'll just
jump in there,
sorry.
Russell. I think the important point is, from Deborah explained what I explained there, that there are different products available to suit different requirements and needs. So we don't always have to go down the corporate PPA route to make that work. There are other solutions, simpler to understand, and still meet the objectives of the generator, the supplier, the corporate in that triangle.
Yeah.
And
absolutely. No, yeah, and I completely agree. And I think that sometimes, that's the thing that can be missed, because for some smaller organizations who just want simplicity, a rego back supply might be enough, particularly if they can get a little bit of certainty of where it comes from. Other people, if you want additionality, for example, it limits what you do, but you have to, as you quite rightly said, both of you, accept the risks and the effort and the engagement that's going to be required to put that in place to deliver the additionality, which is part of your strategy. So that's absolutely right. No, I agree. Thank you. Mark, I'm going to bring you in briefly. Do you want to just give us a quick run through of your thoughts on that question?
Yeah, so thanks, Russell. So I suppose circling back to the title of the webinar, have we made renewables too complicated? I'm going to take the easy route and pretty much sit on the fence right in the middle. And again, as Deborah mentioned, it depends on perspective and who you ask the question. So I can pretty much guarantee that if you were to pose that question to Zygo's client base, at the one end of the spectrum, you will have those that will say, look, it's a piece of cake. We have an in-depth plan. We have a well-defined strategy, and we have clear evidence that, we're implementing our net zero targets in line with our target dates, whilst adhering to any kind of respective scheme that they may be bound to, such as CDP or RE100. And then at the other end of the spectrum, you'd have those that would say, what on earth is all of this nonsense, and why is it so confusing? So I really think it depends on a multitude of factors, and for example, what industry you sit in, how close are you to the topic on a day-to-day basis, what resources are available in your organization to tackle the challenges, and also access to intel, data, and information. I suppose, to give one example, if you are a global corporate conglomerate, with billions in the bank, a team of 1,000 members of staff, all of a sudden it becomes a different ballgame, and you have that expertise, you have that knowledge in-house in an ever-changing environment, and you can stay on the forefront, of innovation. So whether it's battery energy storage, or whether it's 24/7 hourly matching, that's kind of new trends that are coming in, whether it's tax credit incentives that have just recently come into the US, it obviously helps if you have that flexibility. And it's a similar scenario, if you're on the utility side, if you're at the front of power delivery and trading with in-depth knowledge and exposure to day-to-day market movements. But I suppose what I'm trying to say is that the opposite side of the scale, if you're a basic medium-sized enterprise, you might have some social, environmental governance process internally, but when it really gets into the detail, it can be quite overwhelming and hard to comprehend if you are looking to explore a PPA for the first time. So I guess everyone is consistently trying to stay informed, about the latest news in the market, whether it's from a legal, regulatory, or commercial perspective. It's not something where you can sit still and expect to always receive the desired outcome, as you need to be flexible, and it is something that changes consistently over time, and I always see new players moving into this space. So I guess in short, Russell, is I'm I'm sat in the middle, and I'd be interested to hear some of the audience's thoughts as well in the chat function.
That's good. I think that's actually quite a nice summary, Mark, because I think the answer is, I mean, have we made renewables too complicated? And I think sadly the answer is yes and no, because it does depend in many ways on the view and what you do. And I think there's some good points. Is there is a good spectrum of solutions around renewables, some more complicated than others. So no, that's really good. So thank you very much. What I was going to do then is move on, if that's all right with the panel, to our next question. And what I wanted to do is just talk about PPAs just a little bit and say, if someone, if a corporate believes or a generator believes that a PPA is the right thing, what do you all think are the main challenges in terms of getting a successful PPA done? Now, I think Raina, you can't hear us still. So while we try and work on that, Ross, would you give us a view from your sort of supplier or your viewpoint, please?
Yeah, certainly. So I suppose there's a few challenges to go through about what might prevent corporate PPA or what might be a hurdle in that corporate PPA journey. I think firstly for me it's misalignment in the parties in their basic understandings of how a corporate PPA should work. Putting things into context, we are physically linking the generation from a renewable asset, an intermittent renewable asset that has outages and the wind doesn't blow or the sun doesn't shine, to a corporate's potentially more baseload demand. And that comes with challenges that need to be reflected. What happens if there's no generation from the site, or it's delayed, or all the things that can happen when you're linking it to one asset and not just buying power from the corporate from the wider market. So that's a challenge, and I suppose that understanding and appreciation for both the generator side and what the corporate's used to transacting on, the supplier side and what the corporate's used to transacting on, and the corporate side and what supplier and generator can actually do in reality without pricing in risk too much and driving up the cost to the point where it's unachievable. That's all part of the, I suppose, base understanding. So that general misalignment on the expectations of where risk should be placed, how it can be managed, is a barrier, I suppose, but one that can be overcome. We can come on to talking about solutions for addressing that later on. The other point is, I suppose, counterparties might introduce a fundamental change to the contract that you've been negotiating at quite a late hour in the negotiation, quite late in the day, such as the generator has now got planning permission to put a battery on the site, or wants to at some point put a battery on site, but we don't quite know what the battery size is. We don't quite know when it's going to come online or how it's going to operate. A battery on a renewable site can fundamentally change the export profile, which changes how you balance and shape that into a baseload block and potentially change the power that's delivered to the corporate. So that's one example of it, but I can go the other way too. The corporate not understanding potentially what pay is produced is and then wanting pay is consume. So these sort of base understandings have to be fleshed out quite early on in negotiation to not have that come in at a later stage when a lot of the drafting work has been done. Another sort of area to highlight is credit exposure. These are a corporate PPA being 15, 20 years is a long-term agreement. At the very least, between the corporate and the generator, there is a lot of credit exposure there. The corporate is agreeing to pay a fixed price for that power for 15, 20 years. What happens if there's an issue with that power supply? Will the generator have to pay into that? Does the corporate believe the generator has the funds to pay into that at an SPV level, the renewable level, not at a parent company level? And exactly the same way goes from the other side. What if the corporate's demand changes? What if they're not around in year 12? It's a long time for some corporates to have certainty that they're going to be operating in the same manner. So all these things are conversations that have to happen early on and to understand the exposures that they have to others and be willing to put up potentially credit support to meet that. But the same is true for a supplier as well. There's credit exposures that we have and how we operate. And the last point is, because all these complexities are in there, if you're not having the right basic understanding or the right people around to help you, because they're all quite bespoke deals on the face of it, they're not, there's some standardized stuff we can come and talk about, because they're all kind of bespoke, they can take 12 to 18 months to negotiate from the point that you've agreed the high level commercial figure. You're taking a long time to negotiate that deal. And as a result of that, the market can move, that can change the corporate's buying appetite or the generator's ability to get the project over the line. That time is a big problem. So reducing that time is helpful, and preparation helps. And we'll come on to talk about those solutions later on as well, I believe. But they're kind of the main things to be aware of from our experience with EDF.
No, thanks for that. I like that. That I'm smiling here, Ross, because that very much echoed my my experience with a supplier, particularly around the misalignments of understandings, not getting things done in early on, and where the risk is held and managed. I think those are really good points. So, yeah, thank you very much for that. Super. So, Deborah, can I ask you, just bring you in, what do you think in terms of the main challenges of getting a PPA done successfully from a legal point of view, please?
Yeah, of course. Thank you. Firstly, I agree with all of the points Ross made there. I think that they were very well put, and that very much chimes with my experience as well. I think for me, I'll talk to some of those points from a legal perspective, but also we'll throw a few more into the mix as well. So I think the first point is, as Ross mentioned, that deliverability and complexity point, particularly if it's an arrangement that both parties are sort of entering into for the first time. I don't think actually this is a kind of corporate PPA specific point. I think it applies to every contract. If you're doing an arrangement for the first time, it's worth sort of doing a step back and assessment of, has everybody around the table got the necessary skills and the experienced advisors that are needed to enable us to enter into the contract and to bring the arrangement into fruition when the contract's in place. As Ross touched on, it's a commercial point around, are the generator and the off-taker aligned? Are they the right pairing from a risk perspective, a covenant strength perspective, but also from a practical delivery perspective? Are the build times and consumption timelines aligned? Is the shape aligned? And then from an advisor perspective, there's a lack of market norm around these documents, as has been mentioned. So is the right starting point being proposed? I think the next point, again, Ross has touched on this already, but covenant strength. This is a big challenge in this area of the market. This is the covenant strength of the corporate relative to a utility off-taker. That's going to be a key consideration for the generator. At present, the corporate PPA market is rather dominated by large corporates for this reason. The recent government REMA consultation noted that to broaden the access to the corporate PPA market for corporates, we need to look beyond credit ratings. If the corporates don't have the requisite covenant strength, is it in a position to provide credit support? When's this needed? How is it to be sized? These are all challenges that need to be worked through. Similarly, as has been mentioned, generator credit support may be needed. This is tricky because often it's an SPV contracting, so consideration is going to need to be given to the generator's group structure, whether the asset's already operational, whether any debt has already been applied to the asset. So, plenty of points to work through there. The next point is the pricing mechanic. Obviously, this is commercial. What's the price going to be? That's for the parties to work through with some market advice. But there's also the challenge, as Ross touched on, of fixing a power price over a prolonged period of time. And there are legal considerations spinning out from this. If you are looking at fixed prices, are you going to look at indexation, and what will the mechanic for that review be? I think another point that has been touched on already, but I would just like to sort of expand on slightly, is the challenge around making these arrangements portable. So, Ross mentioned that kind of 11th hour, oh, I want to put a battery on site challenge that, he's seen and I've equally seen. That can be a battery, it can be a private wire. It's something that the generator hasn't foreseen at day one that they've thought later on they would like to look at. I think the other point just to note there is if you're looking at a sleeved corporate PPA and you're the corporate and you're looking at a utility sleeving your power, you're going to want the ability to change utility. So that the arrangement needs to be agile to you bringing another utility in if you retender your portfolio at a later date. I think another challenge where additionality is the key driver for the PPA is the best way of structuring the PPA to give you the additionality you need. Private wire power being conveyed directly from a renewable generation asset directly to an end user is clearly the greenest form of power, but it obviously isn't always possible. It's very much geography dependent. So if you can't do that, then what then? Thought needs to be given to the best way of providing additionality from an alternative structure. And if you're getting REGOs as part of your PPA offering, as we would expect, if additionality was the driver, how are REGOs going to be treated? Are they being sold? Are they being transferred at no value? How is a failure to deliver REGOs treated or REGO revocation treated? Mechanisms for those sorts of situations would need to be worked through and built into the PPA. And then I think the final point I would just flag here that I've seen being a challenge in corporate PPA negotiations is alignment around marketing rights. I've seen this sort of be quite a sticky point in the past. The corporate will obviously want to be able to promote the arrangements and highlight the role it's taken in bringing around new renewable generation. But the generator will obviously be mindful of the extent of these claims with greenwashing in mind, and also will want to sort of seek to limit things like access rights to sites. So I think early discussion on that area in particular is crucial.
Super. Thanks. Thank you, Deborah. I'm smiling, and I'm sure Mark is. The talk of covenants and credit and the pricing mechanic. The pricing mechanics and portability are all very much things that we do see without trying to make the whole thing look overly complicated. But so Rainu's still struggling to get in. So very briefly, I sort of said that I would try and cover what he was gonna cover, which from a corporate's perspective was about defining your decarbonisation strategy and executing that accordingly. There, as we said right at the beginning, you don't necessarily have to have a PPA. There might be cheaper or less risky or easier alternative solutions out there that might actually deliver what you want, or maybe what you want in the short term while you take longer to look at a PPA. And again, that's something that we've seen in the past, that when people have got the right strategy and are executing it well, the whole PPA process, if that's what they're going to do, does go much better because they know what they're doing and they've got a clear strategy from the beginning. The next point he was going to talk through was about educating internal decision makers. And while you can't make sure that they know everything, and they don't expect to, that's what they're looking for maybe you to do, but making sure that the people, the stakeholders and decision makers early on understand at a high level what's going on and what they need to do and what we get, what they're going into with a PPA, which in some ways comes back to things like, as you said, the credit provisions, and as Ross said, making sure that expectations are properly aligned right at the beginning of how it's going to work. So that everyone's into that one place, together. And finally, just keep it brief. If you do go for a PPA, to know what risk you can and can't take, to understand the implications of it, maybe to understand if there are any red lines or no-go areas early, because again, you don't want to get a long way into the PPA. You might have the generator, the supplier, the legal counsel, a lot of work done, and then hit a red line that you kind of went, I probably should have known that all along, or we knew that we wouldn't be able to do that. So it's worth kind of getting into those earlier, maybe thinking about whether the time and effort of a term sheet or something is a good investment to get you there. So to try and keep us back to time, Mark, I'm just going to bring you in now and just to get your view on some of the challenges, please.
Sure, thanks, Russell. So I'm going to focus on a few challenges, and again, they've been referenced already by Deborah and Ross, but the first of those is the length of time it takes to agree a corporate PPA and the contracting process. So again, as Ross mentioned, this could be anywhere from 12 months onwards, and this is a really critical point. And I'd say, given the nature of my role and having exposure to multiple PPA transactions on the platform, it means I can pick up some interesting trends from the data about the duration of the negotiations and how that affects the overall procurement process. And what I would say clearly is that what the data shows us is that the longer it takes to reach a deal, the higher the risk and potential likelihood that it may fall apart. Now, it doesn't necessarily apply to every use case, but I'd say the general pattern speaks for itself through the data that we have. And perhaps, to elaborate on that point further and why that may be the case, let's use an example whereby a corporate and a seller agree a term sheet with acknowledgement of the baseline parameters. During the long form contract stage, which may take a full year or more, market shifts can dramatically change the picture of that deal, which was initially agreed in principle. And you end up in a scenario whereby multiple contentious issues may arise between both sides and further draw out the deal and cause a few complications. So I'm also just not just referring to the commercial aspect around pricing as the market moves, but also legislation. Deborah mentioned REMA, efficiencies or new developments in a landscape that just feels like it's constantly changing. Both sides need to adapt and need to use reasonable endeavors, to incorporate these into the contract as these things begin to play out. And I'd say, elaborating on this point a bit further as well, it becomes even more transparent in a physical PPA. So in my experience, these can take longer to negotiate than virtual PPAs. We've dealt with a lot of clients over the years through the platform who are looking at this form of delivery. And it just adds an additional layer of complexity to the process as you are adding a whole new entity by incorporating a licensed electricity supplier, or in some cases, a third-party agent. And of course, they're going to want to have a say, of how the deal is managed and how they position themselves, as I'm sure Ross can attest to, from a balancing, a shaping, a firming, sleeving of the power, especially as baseload offers continue to remain scarce as well in the market. So what we tend to do is we really put emphasis on this. And if you are looking at a physical PPA, it really is important to bring in your supplier as soon as possible into the process, because it will slow things down later on. And I suppose my second point to cover is, which I imagine a lot of people are familiar with, is the connections queue, and also a lack of projects which are timely. So one of the major challenges, not only facing the UK but also the likes of Italy or Spain, is the project pathway from initial design phase to construction and completion. And I'd say in part this has kind of emphasized that seller's market in recent years, causing an imbalance between supply and demand. In the UK, for example, we've had several corporates looking to explore wind-only RFPs, which have become very difficult to find on the UK grid. More projects are beginning to crop up since the rules were changed by the government, but again, this hasn't had a groundbreaking effect on the numbers just yet. And also, as I'm sure Renu would attest to, I know he's not on this call, but because of the project connections issue, there is increased competition for these assets, especially for smaller volumes, where more companies fit within that bracket and are looking to decarbonize. So I'd say those assets especially, can move into exclusivity quite fast. So for corporates, this can be a major problem. And one final point as well, just to add around the lack of projects, is also this is being skewed a bit by government auctions as well. So the new allocation rounds are becoming increasingly competitive and an attractive route to market for developers. So Here, a developer can contract a strike price with a gold standard, creditworthy sovereign fund, and this just means that there's less projects available on the competitive market landscape due to a lack of available projects. And I suppose my overall final challenge, touched upon briefly, is also current PPA prices versus market spot prices. So one trend we have seen recently is that market spot prices and forward curve projections are on a bit of a steady decline compared to the volatile nature of the last few years of activity. At the same time, we haven't seen that same drop off in long-term PPA prices, especially those 10 to 15-year deals with project additionality. And there will be several procurement managers listening in today that I've had this conversation with already, and they could all quite easily elaborate on the challenges of selling these PPAs 10 to 15 years internally at the moment to the finance director, to the executive board, when market prices are at current levels, which makes that commercial challenge a bit more difficult. So in summary, yeah, that's it for me, Russell.
Cool. Thanks, Mark. Just to remind everyone, there is a Q&A section in the bottom right of your screen. Please feel free to throw your questions in there. We may end up shortening the Q&A session because I think I'd like to have the discussion and a bit of a roundup. But we will come back to the questions no matter what after the event and try and get back to people. So, despite all those challenges, I'm still feeling fairly positive about corporate PPAs. You know, there's making sure that we all understand, we're aligned, there's risk management, there's credit, there's pricing mechanics, things need to be portable, time taken, the lack of projects, you know, issues about making sure you've got the right strategy. There's lots to consider, but there's probably a lot of solutions. So I'm going to throw this out to a bit of discussion. What do we think this panel, do we think are the best solutions? How do we kind of overcome these things?
Is there any topic you want to start with specifically, Russell? I'd say perhaps if we look at the length of the duration of the PPA, one thing that I'm sure Deborah and Ross can chip in here as well is around standardization of contracting. So this is a concept that comes up a lot, and the idea is a more balanced approach to risk between both sides to kind of ideally progress and ensure a smoother process. I know in Germany recently, I think it was the Renewable Energy Offensive recently introduced a standardized contract, which the whole aim behind it is to ensure access for smaller utilities and smaller corporates who don't have access to expertise specifically regarding contracting. It's kind of essentially meant to transition over to almost like a formalized document that the wider market can use. But I'd be interested to see how it plays out, whether it's well liked, whether it's well adopted, and whether it's something that they replicate in the wider EU or even the UK.
Deborah and Ross, do you have any view on standardization?
Yeah, of course. I think there's a couple of points there. I think that the first point is the time taken and delay point, and I'd just like to kind of come back on that because I think for me, a lot of the delay, and I must start by saying I have seen corporate PPAs negotiated and signed far quicker than some of the timescales talked about on this call, which is you know, a pleasing message for everybody, I'm sure. I think that the key thing that for me contributes to the delay is some of the time taken to discuss some of the commercials, and the commercials being discussed on a sort of staggered basis. And I think one of the kind of key solutions I am a big advocate of, and Russell, you mentioned this earlier, is agreeing ahead of terms up front, and really investing the time in getting all of the commercial points on the page, having those upfront conversations around them, so that then the kind of, you know, the legal negotiation can happen, but it's around, you know, the legal positions as opposed to around the commercials, and ensuring that, you know, all of the eventualities have been thought about upfront, all of the discussions have been had around, you know, things like what might happen in the future to the site, you know, financing, all that sort of stuff, so that those conversations are had, everybody's comfortable, they can proceed, and then lawyers are instructed to provide full form documents. That's much more efficient. It's also much more cost effective for everybody involved. I think in terms of standardization of the form of a corporate PPA, as you say, we've seen attempts to do this already. So the European Federation of Energy Traders invested in a sort of standard form corporate PPA. It's a few years ago now, and for me it was sort of akin to a bit more of a GTMA type document, in that there was a sort of fixed set of T's and C's, and then a schedule that was right for population. And we've not really seen it used in the industry, and actually my view of it was that it was quite a complicated, very lengthy document. So I think we've seen attempts at standardization. They haven't been taken up on a European industry-wide basis. The REMA consultation that I mentioned earlier, the second REMA consultation that we had recently, did touch on what the government needed to do to intervene to help make the market in this area. Would standardization be helpful, and concluded it wouldn't at this stage. And I would agree with that. I think what we're seeing is corporates investing in their own standard corporate PPA, for corporates that are very active in this space already, much like we have seen in the utility market. And I think as the market continues to develop, we will see sort of standard positions crystallizing around particular issues, and that will be helpful. But obviously that's something that will continue to evolve as we see the deals being done. But yeah, I think the kind of key takeaway for me is that a lot of the delay is around to the the time taken to negotiate commercials. But I would be very interested, Ross, in your thoughts on that.
Yeah, I think the points you've all raised are absolutely right. Overall, there's a reason that sort of a market attempt to standardize and have one blanket contract to suit all doesn't work, because a contract can't suit all counterparties. People have different levels of risk appetite, they have different needs.
Yeah.
It doesn't work. They have different legal teams helping out and different standards of operating. As a supplier facilitating these contracts, we can't have bespoke contracts for absolutely everything, because operationally it's difficult to manage. Therefore, operational costs go up, and that cost is passed on to the corporate or the generator. It doesn't work. So what we're trying to do is standardize our own contract terms. We've been from a point where people reach out to us and ask for, can you send us on your standard heads of terms? Can you send us on your standard contract? We're actually a bit bespoke. Can we have a discussion with you first, understand your needs, and we'll take away and come back to you in a month or 2 months' time with it. That's not very good, and we recognize that. So we're trying to create, here's a contract that we can deliver. It's a fair contract that reflects the corporate needs and the generator's needs, and negotiate that with our partners in the industry, with our counterparties that we already work with, run it past them, make sure it's sort of a standardized approach as much as possible, and it's a fair reflection of the balance of risk and reward. And therefore, we've always got a precedent to work with. That does work. There will be bespoke tweaks here and there in that contract to suit a particular corporate's requirements for particular things, and vice versa from a generator point. There'll be things that need as well. So there's always negotiation in corporate PPAs, and there has to be, because of the length of time with the contracts. It can't be standardized. People can't accept that level of risk. But trying to make it simpler and quicker to execute and have a baseline, I think, is important. That's what a standardized approach means. It's a baseline that we can all work from. And then within that, and within the negotiations, we touched on it before, but sticking to simple principles and not getting too complicated will speed it up. The more complicated you get into, the more complicated the discussions are, the longer it takes for people to assess that new risk, that new balance, and come up with a structure that works. So sticking to sort of well-trodden paths will help deals get sped up quicker. And I think, in addition to that, it's willingness to negotiate. Sometimes people just don't like that word that you've used, but mechanically it means the same thing. And it's like, it's sort of, there are some certain operational things that we as a supplier cannot change because of the way we're set up. That's the same for every supplier, same for every corporate, same for every generator. But around that, we should be able to come to some sort of understanding. So being willing to have that conversation and seeing where you can be flexible will help get it over the line, rather than digging your heels in and going, absolutely not, that's not how it's going to work. So that sort of willingness to work together and get stuff done, and that ties into the point we were making before with Mark and Deborah about this portability of it. So our standard approach is, we think corporate PPAs are long-term agreements for 15 years. We know the supply agreements are not long-term agreements. They're 1 year, 2 year, 3 year agreements, occasionally 5, but that's rare. So there's going to be a time where, if EDF are the supplier and the balancing and shaping partner, we can sleeve that power in, it's a bit more efficient. But we can also, without much more extra effort, get a GTMA with a third-party supplier who they want to switch to as their supplier. We can still do that balancing and shaping. We can still do that type of approach, and you've got long-term certainty in your corporate PPA. We always either deliver that volume to ourselves as your incumbent supplier, or if you've moved away from us or not with us at all, we can deliver that to most other suppliers in the market through the trades we already do with them. Suppliers already trade together, so leveraging that standardized GTMA approach that we discussed about is really helpful, and we're all for that. We have to work together to get these things done.
Cool. Thank you, Ross. I think that's really good. That's a really good summary. I'm really conscious that time has massively flown. So just to remind us, people, please keep sending the questions in on the Q&A. We will pick them up afterwards and try and circulate them. But to wrap up, what I was going to ask was ask each of the panelists, if I gave you sort of 60 seconds each against the clock, do you think you could maybe summarize up, say, 3 takeaways to do? What I'll do is, because I've been sat here thinking, and I've obviously seen Renu do his, I'll just quickly cover his, give you like a little bit of thinking time, and then we'll bring you in and we'll wrap up if that's okay. So in terms of the takeaways that Renu wanted to bring out, he mentioned defining the strategy and being clear on that, defining the framework of risk that you could accept, but, and I think this links to your point, Ross, being flexible and saying, you know, I know where my red lines are, but actually I can be flexible. And I like the point you made. Let's work together to get it done, because that's what ultimately we're doing and where success comes from. And finally, he was saying about making sure that the decision makers have got a basic understanding of what they're getting into. So actually, when you get to the end of it, they're already comfortable with what they're into and where they're going. So having done that, Ross, could you quickly give us the 3 things you think are your key takeaways, please?
Yeah. So for me, first and foremost, it's the principle of maybe any negotiation. It's keeping risk where it's best placed to be managed, and understanding how people can manage that risk, and like not putting additional risks on them, because that just complicates the whole deal and potentially throws it all off. So keeping risk where it's best placed to be managed. Keep things as simple as possible, a point I made not too long ago, but it'll make contracts quicker to execute and they'll be easier to manage operationally. So a win for everyone in that regard. And the final one is preparation is key. You touched it there, Russell, with Renault's summary, but before any negotiation, if any counterparty might not have that expertise internally, or rather than have the buy-in internally, it's getting that buy-in internally, having that internal unity, getting any law firm involved, getting any advisor involved, but making sure that those counterparties as well are prepared themselves. There are counterparties out there, because of the size of the PPA market now that's growing and growing and growing. Of course, there needs to be more and more advisors to fill that need. But occasionally, it might be the first time that counterparty has dealt with a corporate PPA. Everyone has to start from somewhere. But if it's a complicated transaction, it's their first time advising, it might just slow things down. That's fine. We can all deal with that, provided you have the time to deal with it. But if you want to get it done quickly, you need to make sure you have experienced counterparties from all sides of it.
Great. Super. Thank you, Ross. Deborah, do you want to step up to the plate for your 60 seconds and give us some takeaways, please?
Very happy to. Thank you. I think the first point I would make actually echoes the point that Ross has just made. You know, appoint industry advisors and appoint lawyers that have a proven track record of undertaking the structure of the arrangement you're considering, because if you're doing this for the first time, certainly industry expertise is key here. You know, these are complicated or can be complicated arrangements, so you do need those experienced advisors. Take time to understand your key driver for the deal, and if you're the generator, then think about anything that you might want to change on the site during the term of the arrangement upfront, and be open about that. And I think the other point just to note is, if you're the generator, ensure that you're entering into an arrangement that if you did want to apply finance to your project later on, that you know, your arrangement would enable you to do that. So second key point, just that forward look. And then I think the third key takeaway, and this has been touched on already, including by myself, but I would say that time spent agreeing a heads of terms document up front between you is an investment and should lead to a smoother contracting process.
Fabulous. Super. Thank you, Deborah. Mark, I'm going to push you right against the clock because I guess I can. So do you want to just give me your three things, please, sir?
Okay, sure. Yeah, I'll be very quick, Russell. So main one for me is identify the real no-goes and the red flags on the term sheet as soon as possible. Don't waste months of calls. You really kind of narrow down into the absolute critical points as soon as possible, because otherwise it's just lost time in staff and resources and money. And then I suppose my last two kind of combine into one. So be agile, make sure you plan correctly, and just educate yourselves as much as possible about this process in order to be proactive rather than reactive. And it goes back to Deborah's point around if you need support, get the right people involved, both from a legal and a commercial perspective. So that's it from my side, Russell.
Super. Thanks, Mark. I'm conscious of time, so I'm going to really just quickly wrap up and say, first of all, I want to say a massive thank you to all of our panelists. I really appreciate the time and effort that you've taken, the prep, you know, your good humour with all of these things. It's been great to have you on. Thank you so much to all of you. I'm sorry Reno couldn't join due to the technical issues, but that's a shame. All the participants, thank you very much for joining, staying on and listening. Really appreciate that. In terms of the Q&As, we will go through them afterwards and circulate something. We will also circulate a link to the recording. And obviously a bit of shameless self-promotion here. If you want to get in touch with Zygo about what we can do, particularly around corporate PPAs and other things, do reach out to us. The website is there. You can Google it, find the website, but also you can get in touch with Simon at the email address there. So a little bit of a rushed finish up, but thank you very much, everyone. Really appreciate it. Hope you all have a super week, and I will wrap it up there. Thank you very much, and that draws us to a close. Thank you.
It's all.
Thanks,
guys.
Bye.